Well, it finally happened. The Federal Reserve cut rates this week, and they cut rates more than a lot of analysts actually expected. How much of an effect did that have on residential mortgage rates and the Portland metro real estate market? Well, I've got that, plus a surprising new trend in sale prices and the rest of the market stats that you know and love. Let's take a quick tour of the numbers. Thank you so much for joining me today. As always, I'd love it if you would like this video and subscribe if you haven't already. That'll make sure that you stay ahead of the real estate curve with more videos like this one showing up in your feed. Now on with the show. I mentioned at the top of the video that we might be seeing the start of a new trend in sale prices, one that's good for homeowner equity and maybe not so good for buyer affordability. The average sale price came in another 1% higher than the previous week, which looks pretty modest, but the average landed around 5.6% higher than roughly the same time period last year. That's now the second week in a row that we've seen numbers like this in our year-over-year numbers. So far for the month of September, we're tracking around 4.2% higher than September of 2023, and that's coming off the smaller gains that we saw in July, 2.3%, and 2.7% in August. The supply of homes for buyers to purchase increased another 1%. Not a surprise given normal market metrics for this time of year. There was a rise in the number of homes that hit the for sale market this past week, but the number was still on par with what we were seeing last year at this time. There was a little relief with price reductions. They're down about 20% from last week's record high number for the year. The number of new purchase contracts agreed to by buyers and sellers this last week was up from the previous week, so demand was a little bit stronger, but we're still just on par with the numbers we were seeing last year at this time. Again, last year at this time is when interest rates were at 7.2% for the 30-year fixed on average and climbing. A heck of a lot than what we're seeing right now, so I still feel like the demand this year should be higher than last year, and we're just not seeing that yet. On to mortgage rates. The best mortgage rate that I could find advertised on Thursday morning was 5.625%. That's a best case scenario for the 30-year fixed. That's up just a hair from the 5.5% that I've been tracking since last Friday. I've mentioned a few times in the past that the Federal Reserve's funds rate is not directly tied to mortgage rates, so I'm not surprised to see little change in mortgage rates right after the Fed's big cut of 0.5 percentage point on Wednesday. It may take a little bit of time for the effects to work their way through to mortgage rates. Looking forward, we'll be watching for the effects of the Fed rate cut. The markets didn't seem to know what to make of that surprising 0.5 percentage point cut. And we ended up, well, at least it looks like we ended up with one of those classic knee-jerk reactions from investors. So I'm hoping that we'll start to see the markets settle out with a new trend by this time next week. So be sure to subscribe to this channel and tune in here next Friday for the latest developments in the Portland metro real estate market. I look forward to seeing you then.